This is our currency blog for August 5th, 2013. And these are our currency indexes, which let you see each currency as a chart. And then underneath that, it also lets you see the real-time statistical strength of the euro, the dollar, the yen, the pound. And we also obviously have the Swiss, CAD, Australian, and New Zealand. These are the top 4 pairs that people trade, so I wanted to show these. And underneath that, we have the daily, weekly, and monthly trend. So ideally, if you see a currency that's trending up, it's above its hourly moving average and also above its 15-minute moving average, above the point of control of yesterday, which is the average price of the previous day, it tends to be a trend that you want to buy. These are all filters. The primary one is hourly. Above the hourly, look for buys. Below the hourly, look for sells. You can see the pound here went from underneath its hourly to above it at 4 o'clock right here and absolutely exploded up. And its daily, weekly, and monthly trend is up. The dollar was already down. The euro was down. As far as the longer term trends, the dollar was weaker than the euro. So at 4 o'clock right here, it makes sense to be looking for buys in the pound dollar. And as you can see on this chart, 4 o'clock comes and this currency shot up 60 pips. And you had, if you didn't get into it immediately, I guess I drew that on there wrong. It actually went above the hourly a little bit before 4, pulled back, went sideways, and a few minutes before 4 broke out. But nonetheless, it went from 20 all the way up to 53.70. You have many opportunities to get into this trade by this pullback, make 20, 30 pips there as well. And that's really the secret to trading. You want to buy the strong ones versus the weak. Earlier in the day, the dollar was above its hourly. As you go forward here, breaks down. Of these 3 currencies, the yen is still above its hourly. It's still above the previous week's most actively traded price. Last week's pretty much average price is right here. It's in the middle of this at 91.13. So it's likely to be support right here. The dollar, once it breaks the hourly, is likely to possibly find some support all the way down here. And so the dollar yen at 130 is an excellent one to be selling. Weak dollar, strong yen, it's going to go down. It's that simple. And as you see on this chart, 130 comes, you have a nice little sideways wedge pattern right here, and 130 comes, and for the dollar it falls pretty decent, from around 75 all the way to 30. Huge move. And if you miss that first move, you also have another trade right here, you have a pullback trade right here, and then you have obviously a double bottom here at 6, which you probably also saw on each individual currency as well. And that's what allows you to anticipate price direction. You can see the yen went up and then at 6 o'clock failed to make a higher high. Meanwhile, the dollar double bottom. And so you can use that to anticipate future trend direction. This is the point of control, which acted for only about 20 minutes as support. Then it was resistance, broke out right here. This is a very high probability place to buy. It's likely to go to the hourly at the minimum. So at 6:30, which one's the weakest? It appears the euro is not getting any kind of a bounce, and so the euro dollar is an excellent one to be selling at 6:15 here. Scroll back, look at this. You can see on the chart it went up, pulled back. It has a 1, 2, 3 low where it pulls back and is not able to get back to the high. And I think it was around, let's find the exact time here. One of the things I'm working on is our signals, which I posted today in our Facebook page, Leverage Effects. And you can see it did a really pretty amazing job of finding reversal patterns. It gave a sell signal right here, and the market went down. It gave a buy signal on the close of this bar, which went up, close of this bar, which kind of generated probably a small loss. The sell signal right here, which was a decent profit. This one right here, which probably would have got you out here with a nice profit. This one right here, which would have had a small loss. This one right here, which would have made a few pips. This one right here, which didn't generate too much. This one was a loss. And this one, the market kind of went sideways. It's hard to say where you would have got out of that, but probably, with a small loss. But you have a nice win here, and a bunch of small little wins. And these are all based on swing patterns. Anytime the market makes a higher high, higher lows, it's an uptrend. So here's lows, highs, lows, didn't go lower here, made a higher high, so we look for pullbacks. This one went down statistically too fast with too much intensity to the downside, so we didn't take this buy. If it had pulled down here and it wasn't super weak, we would have been buying right here, but we avoided this loss. And then because it was so weak right here, we're looking for sells. It was so weak during this move here, we have a sell. You know, the bigger the pullback, the more likely you are for a win. So anytime you get a sell signal after a couple bars up, a decent distance up, these are some of the higher probability trades. Obviously, this is kind of the dead time of the day, and you know most people are less likely to take those trades for that reason alone. But anytime you get a more decent pullback from the last swing high, you're going to have a higher odds. Well, I mean, at least not only higher odds, but a bigger chance of a big pip win.